In this video, we'll be taking a look at a few chart analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in the link to trade Forex like professional, check out our complete Forex trading course on Udemy. We've officially crossed over 5,000 enrolled students, and reviews are awesome. So do try to check that out if you're interested in learning trade Forex like professional. To get started, we're talking about the gold chart on the 4 hours time frame. So we'll be reviewing gold, Nasdaq, US30, which is Dow Jones, and EUR-JPY. Some really interesting charts we're going to be discussing today. So gold chart on the 4 hours time frame. We've been following this for quite some time now, and if you followed our videos over the last few weeks, you would notice and would have observed that we've been chopping towards the upside, and we're taking advantage of this positive move on gold to the upside all the way, starting from the moment we took out this symmetrical triangle, right? So the last review we made was talking about taking out these all-time highs, which was what we had over here. And if we take a measured price movement, that's approximately 800 pips, as the case may be. So this is the 4 hours time frame. We're definitely going to go to the lower time frame to see how we can take advantage of what we can see on the chart right now. So 800 pips approximately from all-time highs to current price levels. Decent, trade opportunity in my opinion. And my target for gold's current price movement is approximately, I'm just going to show you how I make a measured price movement when we're in price discovery. So you take the heights of the symmetrical triangle, measure it with the breakout, and it gives you some sort of average price target for gold, and that will set us at around $2,940 per ounce of gold. So this is my target right now for gold. Before we start to think about looking towards substantial price rejection, so there's no guarantee that we wouldn't blast off past this level. So we may go as high as $3,000 before we even get any sort of substantial retracement back to the downside. But that doesn't mean we wouldn't see some swing price movement to the downside as we climb higher. So just as you can see right now, we've been creating higher highs and higher lows, right? So higher lows over here and higher highs. So these higher lows are opportunities for us to jump back into the trade for those who aren't in. So right now, I'm more skeptical about going long because there's clearly no safe spot to get into a long position right now, right? Because even if the market decides to creep down a little to this trend line, jumping into a trade right now over this trend line could simply mean price consolidating and giving way to the downside before going back up. So right now it's a bit risky to go long on gold, but we're still going to review our options to see how we can take advantage of the market as the price action evolves. So going down to the lower time frame, so I'm going to start with the 1 hour time frame, for example. So my chart can be expanded. I apologize for the many lines on screen. These lines are extremely important because they mark out significant area of values. So I'm going to get rid of this one. So this one over here marks out our previous all-time highs that has been broken. This one signifies, a good area of value. The first highs we took out had a rebound before we climbed higher, right? So these two price levels are significant area of values, while this trend line marks out the current higher lows, right? So this is the levels we are watching out for in case we intend to go short. So looking at the bearish case scenario first for gold, we'll be waiting for price to retrace back down to the downside, consolidate on this trend line, and give us a bearish breakout to the downside. So this could be, or this could present us with an opportunity to go short. Your entry is going to be immediately after the breakout. Stop loss is going to be above the consolidation leads to the breakout, while your take profit target could be first around this area of values, which is the all-time highs, which is likely going to come back for a retest or not. So there's no guarantee that we'll get a retest, but if you get a breakout on this trend line, then this is a good area of value to place your first take profit target, and this other area of value will be a good price levels to take, set your second take profit target or cash out the rest of the position, but there's a good chance we hit this level and bounce off to the upside, right? So these are just out of assumptions based off of the possibility that we may see some price reversal to the downside. So that's my bearish case scenario for gold. Other than that, I'm going to stay bullish, and to stay bullish, I'm watching out for this all-time high. So the current highs, which is this area of value we have over here, I'm watching out for a breakout of these price levels for me to go long, right? So it depends on how the price action develops when we get there. So we're probably going to see some reversal to the downside, consolidation, maybe not getting to this trend line, but touching back at this area of value, consolidating a little, and then giving us that bullish breakout to the upside. If this happens, you want to go long after the breakout from the consolidation. Stop loss obviously is going to be underneath the consolidation leads to the breakout, and you can trail the rest of your positions as we go higher, since we are currently in price discovery. So this is exactly or entirely how I'm going to trade gold right now. Other than this, I'm going to stay away from this chart because you simply can't jump into a buy trade right now. I expect markets to give you what you want, right? You have to be patient, because if you're not in already, you already missed the sweet spot or the sweet entry, which is supposed to be around the breakout of this all-time highs, or around this rebounds or retest, or around this breakout here, right? So right now we're just simply trying to look for the best opportunity based off of what the market is currently presenting us, right? So this is the first bullish case scenario. Second bullish case scenario will be watching out for how price evolves. So consolidating, retracing, touching this trend line, consolidating a little, and then bouncing off. So if this happens, then you could equally draw a trend line like this, depending on how the price action is formed, and a breakout from this trend line could be an opportunity to go long, while your stop loss is going to be underneath the consolidation, which will also align with placing your stop loss underneath this trend line. Decent, setup in my opinion if this happens, and then you can go in, ride the trade as we go higher. First take profit target is going to be around this all-time highs, then you ride the rest of positions as we go higher. So this is another opportunity to go long, and I think this is totally possible. It's totally possible that this is going to happen, but there's no guarantees. But this is what I'm watching out for to go long. First, watching out to see if we consolidate around this all-time highs for a good breakout to the upside. Second is waiting to see if we pull back a little, consolidate around this trend line over here, and get a lift off or a bounce to go higher. This is how I'm going to trade gold. If you disagree with me, please leave your thoughts in the comment section down below. And if you have other opinions, please also let me know in the comment section down below. And I'll be happy to share my thoughts as well with you if market does change. Moving on, that's it briefly for gold. Moving on, we're talking about Nasdaq. So Nasdaq on the 4 hours time frame looks bullish, looks awesome, except for the fact that on Friday we had the NFP, and that has led to a price decline on Nasdaq. So a quick brief price decline. I want to explore that in this video and see how we can take advantage of what the market presents us. So there's two clear opportunities here. One, a bullish opportunity to go long. Second is a bearish opportunity to go short. But I'm skeptical that the short side of this trade might be short-lived, because we are still strongly in a solid bullish trend, right? And the US economy seems to be doing better since Trump took over, right? So 4 hours time frame, what we can see is highs, right, with the trend line cutting across these highs, where we've had difficulty breaking out from this pattern. So this is a bullish setup, so it looks like a bullish flag, and the only way to take advantage of this would be waiting for price to consolidate underneath this trend line, leading to a bullish breakout to the upside. If this happens, then you want to go long immediately after the breakout, because your consolidation here would already be acting as your confirmation for a bullish move. Then your stop loss is going to be underneath the consolidation at least to the breakout. First take profit target is going to be over here, but God knows I won't be taking any profit at these price levels. Then you can trade the rest of your positions as we go higher. This is a classic bullish setup in my opinion. If this happens, I'm not going to think twice before going long. I'm just going to jump in. Even if it hits my stop loss, I know I did everything right for me to go long on this one, because the trade aligns with the current trend. We've had this massive consolidation for what? For 2 months now. So yeah, going into 2 months now, we had this massive consolidation. So this is similar to what we had on gold, right? So this is gold's consolidation from October last year, right? We had this symmetrical triangle consolidation. Finally, when we had the breakout, you can see the massive explosion to the upside. So this should be approximately, gold has risen approximately 1800 pips or 1900 pips since it's broke out from this consolidation. So similar pattern is what we can see on a Nasdaq. We've had this consolidation for 2 months now, so I do think the moment we break out, we are going to see price rising rapidly to all-time high. So you don't want to miss that. That's the reason why I'm waiting for this consolidation to give me a good opportunity to go long if we do get a breakout from this area of value. So now that's my bullish case scenario. Pretty confident about that. Now to explore the bearish case scenario, we're going to watch out for two things, right? So the first, I'm going to go down to the lower time frame. So 1 hour time frame, for example, so you can clearly see what I'm talking about. So 1 hour time frame, first thing you want to watch out for is a consolidation, a good consolidation around this area of value. And the next thing we'll be watching out for a breakout to the downside, right? So I know a lot of traders will want to jump to a sell trade opportunity because we took out, we bounced off of this, we got rejected from this area of resistance, but I wouldn't be so fast jumping into a sell trade, which is pretty a decent move to make because you don't want to get into a trade that eventually that's probably going to lead to a fake out, right? So what I do is watch out for this consolidation. So this consolidation gives me some sort of confirmation that the bears are in charge, are in control if we do get a bearish breakout after that consolidation. So this consolidation over here is going to be my confirmation to go short. So my entry is going to be at a breakout from that consolidation. So bearish breakout from the consolidation. Stop loss is going to be above the consolidation that leads to the breakout. Take profit target. First one is going to be around the lows. Second one is going to be around these lows while I trail the rest of my positions as we go lower, assuming I have more positions to hold, right? So this is going to be a very good opportunity for a short trade position, in my opinion. So the only reason I'm considering going short, I know a lot of people would want to point out the fact that we're in a bullish trend, why go short and all that. Now the trend ended, or the trend is on hold the moment we got into this area of consolidation. That's something to take note of. So over here, we had a bullish move to the upside, higher highs, higher lows, and all that. But the moment we came into this zone, at least in retrospect, now we're in consolidation. So we are ranging. So anything can happen within this area, right? So we could bounce off to the lows, go up, bounce down, go up like that. So that's the reason why it is okay to look for bearish trade opportunities in these market conditions, because we are currently ranging. You can see lower highs, sloppy lows. So there's no clear trend looking at this 2 months time frame, right? But we are making lower high, so that should also signify that okay, there's some sort of bearish pressure to the downside. And if you take a look at the past price movement, we hit this place, consolidation, dump, went up again, consolidation, dump, went up, consolidation, dump, went up in steps, higher highs, higher lows, consolidation, dump, another one here, dump. So there's a good chance following past price action, this price action strategy in my opinion, following past price action, there's a good chance, or there's a decent chance that we do go lower. Maybe the next time we attempt to test this area of value, we probably have enough momentum to break through, right? But for now, I'm open to the bearish opportunity on this asset, which is Nasdaq, and I will do where to jump in if market gives me what I want, which is waiting for a consolidation and a bearish breakout. That's it briefly for Nasdaq. I believe my bullish and bearish case scenario were clear enough for you. If you disagree with me once more, please leave your thoughts in the comment section down below. Moving on, we'll be talking about the Dow Jones. So the Dow Jones, which is the US30, this is similar to what we have on Nasdaq, and all I want to do is just go bullish on this, right? And to go bullish, I'm going to wait for a price retest, consolidation, followed by a good bullish move to the upside. If this happens, it's a no-brainer. I'm just going to jump into a buy position. Stop loss is going to be underneath the consolidation list of breakout, and I'm going to trail my position as we go higher, because price discovery means there is an endless possibility here. We could go as high as $50,000 for the Dow Jones, right? So you have no idea where it's going to top. So you just rise the position to go higher, take profits as much as you can, and enjoy the ride. So now I talk about this consolidation because it gives me a tighter risk to reward ratio, right? But even if we don't get this consolidation right now on Dow Jones, say we just move to the upside and just break out immediately, I'm still going to jump into that buy position, because we've clearly had two good solid rejections, right? Over here, or multiple over here and over here. So the moment we take out this area of resistance, I'm going to jump in. Even if it means putting my stop loss around these lows, I'm going to take that risk and ride this trade as we go higher. So the opposite side of this trade will be watching out for a bearish case scenario, right? And know right now, if you take a closer look at this chart, so 4 hours time frame, remember, this is starting to look like a double top. So you have the left top and you have the right top. So this seems like a double top, which means there's a good chance we just simply crouch down, go down, and that will be the end of the bullish trend. Very real possibility here, like very possibility. But how do we take advantage of price actions like this? So this is even more difficult to trade than you would expect, right? Because the logical price level to get into a trade like this would be waiting for it to come down into this area of value, consolidate, and then give room, right? Like fade out, you know, lead to a bearish breakout, excuse me, right? So this is a logical way to trade this sort of chart pattern, because this is the only way you get a confirmation that this double top is going to be valid. So like an M pattern, right? So this is going to be the neckline. So similar to how you trade head and shoulders. If this happens, then you want to go short over here, right? Because this means the trend has eventually reversed. So you can see a clear area of support over here. So if we take out this area for support, you want to be on a short trade. You don't want to be on a long position on that. So that's one way to trade this. The logical, the best way to reduce your risks of trading a fake out, right? Now, another way for some traders would be waiting for a reversal to the upside a little and then shorting the market with the hope that we are not going to break out from that all-time highs, right? And then we see a move to the downside. So if you short this over here, your stop loss will probably be around, let's see, approximately 400 pips, which is still very wide in my opinion, right? So risking 400 to 500 pips stop loss just with the anticipation of maybe price is not going to take out this area of resistance, it just doesn't cut it in my opinion, right? So you don't want to do that. That's why, like I said earlier, the best way is waiting for price to reverse to the downside, come into this area of value, consolidate a little, and break out. So when you get a breakout from here, that's where you want to jump into the sell trade opportunity. Beside that, I think it's best to just stay patient, wait, see what the market does before you take advantage of whatever the market presents you. Another opportunity will be waiting for price to come into this area of value, consolidate a little, right? Consolidate a little, and then give us a bearish breakout to the downside. So then you can go short here. So this will be similar to what I was watching out on Nasdaq to play out here, right? So the Nasdaq trade looks cleaner. That's why the bearish trade opportunity looks more obvious on the Nasdaq compared to what we have on US30, right? So to go short, you could also watch out for this. Go short after the breakout. Stop loss is going to be above the consolidation that leads to the breakout. Take profit target is going to be around its lows, and then you can trade the rest of the positions as we go lower. So that's it briefly for US30. But for me, I'm just simply watching out for a consolidation and a breakout from this area of resistance. This is going to be the best trade opportunity in my opinion for a bullish breakout to occur for us to go long, because it aligns with the overall trend and it will also align with this consolidation we have over here. So I'm personally watching out for a bullish breakout. There's no guarantee that that's going to happen, but if it happens, that's going to be the best and the surest trade in my opinion on US30 Dow Jones. Moving on, we'll be talking about EUR-JPY. So this is the last chart for today. I don't trade currency pairs, but I saw something interesting here and I decided to share it with you guys to trade currency pairs. So EUR-JPY top-down analysis, weekly time frame. You can see we just got rejected from this all-time highs or this area of value, right? Dating back to 2008. So 2008, we got rejected, and we have a trend line trailing the lows, dating back to 2012, and we have this significant area of value here, which price bounced off of at August 2007. We got rejected from this price level in December 2014, and we broke out from this area of value in May 2023. So I think our next logical price level or target should be around this area of value. So for some sort of a bounce, right, before we probably go higher or go lower, as the case may be. So there's no way to tell for now. So we're just going to follow the price action as it's evolves. So going down to the daily time frame, for example, so we want to focus on, so before we go, I want to focus on what's happening over here to see if we can spot our good trade opportunities for the week ahead. So going down to the lower time frame, so starting with the daily time frame, for example, what we can see is after we got our rejection from these highs, now we seem to be having some sort of bearish continuation, right? The reason why this is a bearish continuation is because we had a massive dump, we had a good consolidation for what, approximately 6 months, I think, August to February, now 6 to 7 months. Good consolidation of 6 to 7 months, and now we seem to be having a breakout from that consolidation to the downside. So there's a good chance price slowly grinds to the downside till we get to this area of value. Then market decides again, should we go higher or should we go lower, right? Then it can go higher or it could go lower, as the case may be. But we don't care about that right now. All we care about is taking advantage of the current price action, which is what's happening over here. So going down to the lower time frame, 4 hours, for example, the best way to trade this, in my opinion, would not be to jump into a trade right now. So I would wait for some sort of consolidation, right? Consolidation followed by a bearish breakout to the downside. This would be a better confirmation, in my opinion. So then your entry, so this would be a better confirmation. Your entry could be immediately after the breakout on the small consolidation. Your stop loss is going to be above the consolidation list of the breakout, and your target could be as low as these price levels, right? You can see how quickly it took us, from all the way from these highs to these lows, dumped really fast. So if you take a measured price movement from here down to these lows, this will be approximately 650 pips, as the case may be. So decent trade opportunity, in my opinion, and stop loss will be just 200 pips. So a risk to reward ratio of 1 to 3, right? Your stop loss is, your take profit target is 3 times as large as your stop loss. So this is going to be a decent opportunity, in my opinion. If this happens, mind you, we may not get a clean consolidation like that. We may simply get a pullback. So we may get something like this, some sort of pullback into this area of value before we dump again, right? So then we're going to look for, review the chart to see how we can spot another opportunity for that week, if that happens, right? But I'm more inclined to waiting for a consolidation like this around these price levels, they're followed by a bearish breakout. So the reason is because we seem to be around a good area of support. So if you take these lows like this, so this looks like a good area of support, in my opinion, and I'm going to treat it as such, right? So then having this consolidation over here followed by a breakout simply validates the fact that, okay, we are currently at the support level, and it's logical to expect some sort of consolidation and a breakout for us to get an entry around this price level with stop loss above the consolidation that leads to the breakout. That's it for this week's analysis, guys. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you disagree with me, also leave your thoughts in the comment section down below. If there's anything you want me to cover in next week's analysis, leave your thoughts in the comment section down below. And once more, our course is out there. Complete Forex trading course, learn price action, learn market structure, learn everything you need to know about Forex to get started with trading, start making profits. We've got over 5,000 enrolled students, and you can see the reviews for yourself. It's awesome. People are actually, seeing significant changes in their trading journey, right? So do check that out if it's something you're interested in. Without further ado, I'm going to end this week's video right now, and I'm going to see you next week.